All right, everybody. Welcome back to the AJ Brown Show, starring the one and only AJ Brown and myself, your co host, Cyprian Francis. Welcome back, everyone. Today is November 5th. Wow, AJ, we're already in November.
I can't believe it. Time flies. Time
We sorry,
flies.
apologize for not having the live stream last week, right? The main man was busy bringing
Mhm.
into the world a wonderful, beautiful little baby girl.
That
How's that?
we did. Th- that we did. That we did. We had to go to the hospital on Thursday, and my wife, gosh, she's a strong woman. We were through the whole labor process all the way up through Sunday morning. Born on Halloween, 5:32 a.m. Baby
That's
girl.
that's a legendary birthday right there.
Yeah, yeah.
There's
My,
gonna be many stories to tell.
Yeah, I think that Halloween's going to mean something special besides just dressing up in costumes. We're going to have some good parties in the future here. I'm stoked.
Well, that's exciting, AJ. I mean, it's always it's your first, right?
Uh-huh.
So that's exciting. Yeah, and it looks like you're catching your sleep and getting back to business, right?
Getting back to business. I don't know about catching my sleep, but you guys know I've always been doing all sorts of things, whether it's running that foundation up in Chicago with all the kids, or whether it's running Trading Trainer or doing my own trading. So my sleep habits have been off for years. So the scoop is the good thing is I give relief to my wife in the wee hours because I'm already up. So it's all good.
Well, we're
Newborns.
back. Yeah, wonderful. We're gonna applaud that. We saw some good commentary from the trading trainer community.
Yeah,
Everyone's excited, and but we're getting back to business. So today we're talking about trends, options trends, and how they play along with the overall market. So what I
that's
want to
right.
do real quick is just pull up a screen of the S&P 500 because I know that that's what we're going to be using as an example.
That's
And I
right.
mean, this is basically the last, I don't know, week or so, 10 days, and it's just skyrocketing up. Like the market will not take a breath. And so we're going to talk about strategies, but also what's your take on this market just nonstop going up?
Well, the scoop is, and I'll show you my screen in a second as well on the S&P 500. We're hearing all sorts of news from talking heads right now. And I call talking heads. Talking heads are your, people on TV, people on cable, people on the radio, people who have blogs, people who do podcasts and YouTube channels, and they're all focused right now on this last, I would say, month worth of gains. But if you take a look at my chart, sometimes I always tell my traders to look a little bit past the tip of your nose, right? The tip of your nose, because if you look at my chart, it explains a little bit more. The S&P 500, if I go back in time, and I always ask people to take a step back. If I go back in time, I'm going to go back to maybe to around when the pandemic was first realized. So this is going to be a 2-year daily. And so here's where the pandemic was recognized in March. And then this is when people were like, yeah, but business can continue. We don't have to be completely shut down as a world. And so all of a sudden, the S&P 500 has this long-term trend. And look how long that is. That thing is like 18 months or more of long-term bull trend. And so we had this little pullback starting in the beginning of September, right after Labor Day. But this trend is too much of a trend to contend with, right? And so if I now zoom into like the last 6 months, when we look at what's been going on, and I still have long-term trend and channel drawn, we had that pullback for the beginning of September, supply chain worries, all these inflation worries, whatever the hot topic was that caused us a little bit of pullback. First thing that happened is when you have this long of a trend, you have a whole bunch of people, especially when our Federal Reserve has been keeping interest rates so low. The risk-free interest rate is what we call it. The interest rate you can get by putting your money into a mutual fund or putting your money into a savings account. It's like nothing. And so a whole bunch of people are looking at the stock market and looking at an 18-month trend and starting to say, and we're talking about amateurs here, they're starting to say, oh my gosh, I should be there. It looks like there's less risk in the market. So they put their money in, especially at this top. And then as soon as it pulls back, they're like, oh gosh, I have no experience in the markets and investing. I'm scared. I'm white knuckling it. Did I make the wrong mistake? Did I make the wrong mistake? And as soon as the market started to go back up, these people, these cats that are amateurs, were like, I better just take my money out and go bury it in the backyard in a jar again. And so you see what happened. As soon as that break even point came, there was a couple of days of like stall where those people were taking their money back out. Probably those people that shouldn't be in the markets anyway, because they've got like zero experience, haven't ever met me or any of the other folks out there to kind of guide them. But then as soon as that money was out, the market continued up. But these folks that have experience and know about the long-term trend, they've been happy because they expect the money to come up to this point, right? So if we just look at the last month, we're like, woo woo, this market is out of control. But if we look past the tip of our nose, we say, woo woo, the market's going back to where it should be, where the trend followers want the market to go back. This is nothing special. Now, what's going to happen is if it continues up on this very aggressive rate, right, and it starts to go higher, then these people are going to start taking their money out who were expecting it to just come back into this channel. And so you'll start to see it stall. I've got this ascending line of resistance, and we definitely don't expect to see it go above that. It's going to stay right in this range, return right back to where it is. In other words, everybody's talking about how crazy this market is. The truth is this market's doing exactly what it's supposed to be doing. And anybody who's got kind of a bigger perspective knows that.
And so this is the S&P 500, right?
Correct.
And so what we're trying to ascertain today is why do certain stocks move with the overall market, right? And what's the logic behind that?
So that's a phenomena called correlation. Mathematicians like to call it correlation. And I've been doing this since 1997. I've been, I opened Trading Trainer and started teaching other people in 2003. In the last 15 years, probably around 2006 and more, the scoop is that there's been an instrument that has become very popular to invest in, and it's called an exchange traded fund, an ETF. And that has led to the strongest correlation effects that we've ever seen. So what's an ETF? It's a little bit different than putting your money in a pension fund, putting your money into a mutual fund, putting your money into a fund. An ETF is a mathematically generated instrument that's supposed to mirror something. The oldest ones and most popular ones are called the spiders, the Qs. The spiders basically mirror the S&P 500. The diamonds mirror the Dow Jones Industrial Average. The Qs mirror the NASDAQ Composite Index. So, but those are the old ones. They've been around a little bit longer. But now we've got ETFs coming out of the wazoo. We've got ETFs for the transportation sector, the energy sector. I mean, the proliferation of ETFs out there has grown so much. In fact, take a look here. I'm going to show you the SPY, the SPY.
I was even going to throw in there, do we have a crypto ETF now, or?
We sure do.
See?
That just came around, and that's kind of cool too. Yeah, you see here's and it's mirroring exactly what the S&P 500. When you have a hedge fund, a pension fund, that's where the big money is, mutual fund and ETFs, right? When you have those funds, you've got a manager. And that manager is constantly buying, selling stocks and other instruments to fill up this fund. The ETF doesn't change, right? It's a mathematical equation that says for every time somebody buys a share of an ETF, I'm going to buy so many shares of this stock, this stock, this stock. Say, for instance, the transportation sector. Every time a share of the ETF is bought, maybe one share of the railroad is bought, one share of the trucking company is bought, one share of FedEx is bought, things like that. And so now all of a sudden, because of these ETFs and because of their concrete structure, they're a basket of securities that the equation doesn't change. people buy these ETFs and it affects all of those equally the same amount. And so they might hear something in the news like, hey, there's a supply chain worry, and they might start, selling off of the transportation. It doesn't matter whether you're a FedEx or whether you're a railroad, you're going to go down because people are selling off of that ETF. Now, people have been like sold by the talking heads out there, in my opinion, that ETFs are the safe way to go. Diversification. We're seeing so much liquidity, so many people buying and selling ETFs, that it's creating this correlation effect, that it doesn't matter, to the same degree as it did, whether you're, a UPS or a FedEx, because you're in this ETF and the people who are trading the ETFs move FedEx and UPS the same amount up and down. It's hard to differentiate those two stocks, right? So, the most money moving the markets is from those funds, the managers, but now you see a huge chunk of market moving money going up and down from these ETFs. And so that's what's causing this extreme correlation. The S&P 500 goes up, the sectors go up, and all the stocks within them go up as well. It's kind of like a very strong tide. Now, there is still those folks, the fund managers, and of course, individual investors like me, that can still look at the fundamentals of individual stocks. So you'll see a slight diversification, but that underlying tide of correlation is strongest now than I've ever seen it in the 25 years, 20 something years that I've been doing this.
Yeah, probably something to do with the ability and ease to get into these ETFs, right? In some of these smaller accounts too.
Absolutely.
And so my question to you, AJ, is do you do any ETF type strategies? Because I'm assuming you can buy and sell options on ETFs just like you can on regular stocks.
Absolutely. So ETFs are just as optionable as, stocks and other, anything that's optionable, we can use our strategies on, right? Because it's all about, think about this. When it comes to trading, whether I'm trading stocks, commodities, Forex, crypto, options, futures, if I'm trading baseball cards or real estate or antique cars, it's all the same process. Think about it. It splits into two main tasks. Number one is to identify a pattern somewhere in the market. And then number two, apply a trading strategy to it that will profit from that pattern. But the scoop with like trading cars, trade cards, antique, crypto, Forex, stocks, commodities is there's really only one transaction, maybe two, that you can do when you identify a pattern. And that is, I can either buy it and hope it goes up in price, and that's a profitable thing. Or sometimes we're able to short it. We can borrow some of this from somebody, sell it, and then if the price goes down, buy it back at a lower price, keep the difference ourselves, and return whatever we borrowed to whoever we borrowed it from. So we can only profit on price moves up and price moves down. Recognizing those patterns, especially those price action patterns, takes a little bit of art, and it's not as much science, right? In other words, it's a very speculative kind of assessment. With options and futures, anything that's a derivative, we've now increased the number of ways to profit from patterns from 2, if the price goes up or the price goes down, to 27. And so that adds a little bit of complexity and understanding, but it gives us so much freaking flexibility, and to be able to profit off of anything, not just price moves, but even things like we like to analyze patterns of just time, which is a very reliable variable. In fact, if time starts to, if all of a sudden we don't have 60 seconds in a minute and 60 minutes in an hour and 24 hours in a day and, 7 days in a week and 52 weeks in a year, if that starts changing, I think we've got something more to worry about in the world than just investing in things, right? That's a big problem. So we can profit off of time using options, and that's really reliable.
Yeah, that's that 27 ways of making money seems to be like a stat that continues to resonate in my mind. Um, and I think as for any new options traders, this idea of making money when the market goes up, when the market goes down, when the market goes sideways, when the market does nothing, like that's what makes options and options investing unique. But so my question to that is, if we have all these thousands of assets to trade and each one of them can be traded 27 different ways, how do you go about identifying your opportunities?
Yeah. So it's kind of a little bit of reverse engineering, isn't it? So you can take one of those 27 strategies, whichever one actually fits your personal lifestyle the best, right? So if your personal lifestyle is not of an active trader, for instance, in other words, active trader means you have to be looking at the markets all day, every minute of the day. And if you ever want to take a break from that, that means missed opportunities. And possibly if you're trying to do some selling of your assets, you could run into some problems. So you pick one of these strategies that perhaps isn't as time dependent on your part, meaning that you can be a little bit more sloppy. Maybe you're only going to trade a couple hours a day. Maybe you can skip a day or something like that. And you reverse engineer to say, okay, this strategy works with this particular pattern on this particular set of scenarios, and you just go look for that scenario. Screeners, even a bunch of free screeners out there, but especially some of the screeners I've been working on now since 2007. We're talking about 15 years worth of experience to go look for these particular patterns in different stocks. And I'm not just talking about price patterns. Options allow us to profit, like you said, on stocks moving up or down, which is what everything else does, but also on sideways. But options allow us to profit on things like time passing by. That's because they have an expiration date. And also, they allow us to profit on things like if people's confidence in the market gaining or waxing, right? If it's going up or down, whether people are scared or whether people are confident, they're comfortable with what's happening. Right now, if you come back to my S&P 500 chart, interestingly enough, usually when we have trends up like we're seeing right now, this excites a lot of people. But if you look at what's happening in the options market, you're actually seeing that because this is even a little bit on the aggressive side of a rebound, there's a lot of big money traders who behind the scenes are loading up on insurance. In other words, they're buying puts at cheap prices in order to make sure that if this all of a sudden collapses, that they're covered. And so that creates another tradable way, if you're trading options, to profit, right? You're profiting on people's fear that this trend is going to soon pop. And that's happening. And you wouldn't be able to trade that any other way unless you were trading options.
Yeah, that's for sure. So, these scanners that you're talking about, right?
Yeah.
So for anyone that's watching that isn't a trading trainer member, every Thursday AJ has a mastermind call. With the members, and you go over your signals and opportunities. Can you elaborate a little bit more on that? How you're using that technology to help make and identify opportunities?
Absolutely. We've got 3 different screeners that I have worked on over the years that we're pumping all of our picks to our users. And then, of course, our users come, some of them with some experience. So they've got their own screeners looking for patterns. And what we do on Thursdays during our workshops is all the users bring their vetted symbols to us right in the beginning of the call, and they throw them out to us, and we look at them right there on the call, sharing the screen with everybody, allowing people to type in questions if they have them, and we evaluate each one very quickly to see if this would be the lowest hanging fruit for us to prepare a trade on. And then we pick that one, and as a group, we go ahead and we plan out our strategy for the next couple of days on how we're going to exactly profit selling option premium on this. What are the steps? What are we going to look for? We're going to look for a top reversal, and then we might either short some symbol or buy some back month puts. Then we're going to wait patiently for a bottom to form where we're going to sell some puts or buy some call protection. Whatever it is, we're going to document it out and we're going to create a trade plan. Everybody's, who's ever been successful at investing knows that we create a trade plan and then we trade the plan that we created, right? That's the way to success. And it keeps you sane too. You don't want to go into the markets like, some gang member just shooting at the hip, because that's like, you might as well go to, Atlantic City or Vegas or Macau and just shoot your money that way, right?
Right. So seeing as that was your mastermind call yesterday and today's Friday, anything you want to just throw out there as something you're eyeballing?
Yeah. I mean, don't forget, we've been following Mattel, right?
That's right.
And so Mattel, I'm going to pull that up. We've been following Mattel. Mattel is giving us a trade signal right now. Mattel's on this slight decline. This is going to be the best time in the next couple of days when we really start hitting that. You'll notice that it's been stalling at this descending line of resistance. As soon as it starts heading down, this is going to be time to start doing our bear put diagonal debit spread, right? We're going to leg into that guy. That's going to be a really great trade. We looked at some stuff yesterday. I don't want to give away all the goods, but we looked at some nice symbols that the groups. And one of the things I got to say on our workshops is that we get so many good symbols that it's often very difficult for us to pick the best of the best, the lowest hanging fruit. I mean, we sometimes have to say to the crew, hey, we have to narrow this down to one. And why don't you go off on your own, use the same strategies we do on our workshop and plan them out on your own. And then what I offer everyone is, if they want me to put my eyes on their planning, we have a whole thing inside of our web portal, SIP, that they can send me their trade plan written out, and I'll go ahead and evaluate it and give them pointers so that they're not going in there blind. I want to be able to trade with them, not just have them like go off on their own.
Yeah. And I'm looking at this Mattel chart, and I think we did the episode maybe like 3 or 4 weeks ago when it was just bouncing off of that support, right?
Yep.
And so that top line was there before the price action even got there. And so
Yep.
your strategy is playing out perfectly. It did, jump through that resistance a little bit, but now it's consolidating.
Yeah.
So that second leg of the trade is being set up. And so
Absolutely.
the other symbol we looked at was American Airlines.
Yeah. So American Airlines is doing exactly, even though, it's got some gapping, we don't care so much about what it does in the middle. Besides, we watch it. What we like to do is we like to pay attention to where it reverses. And so it's coming up, and you can see even in today's bar, it started higher. This is called, sometimes we call this a reversal down bar. And we're going to watch and make sure it confirms going down. But, the way that we analyze and we teach our folks how to recognize these patterns is, pretty solid.
Well, that's so the trade you put on is still active, even if it's cutting through that resistance, and you're eyeing what expiration for that?
So now is when we're going to do some selling of our call premium, and then we're going to buy a protective put. So we're going to sell some call premium with a 22 expiration. We'll sell it for the November 19th expiration so that we can get a profit in just the next 2 weeks. So we're going to get profit the next 2 weeks, and we'll also buy a protective put probably down here at the $18 price where we have been buying our protective puts, so that if something happens and it shoots down below our level of support unexpectedly, that'll still be a profit situation for us. So we basically create a spread between these two, and we've got our back month option working for us as well.
Awesome, beautiful, love it on the chart, loving the setup.
One thing you pointed out for us, Sip, is that, people are always worried about if we shoot a little bit higher than support or lower than resistance. Listen, we consider something still trending if it goes all the way about 38.2% in either direction outside and then reverses. It's still in that channel. It's when it shoots about 38.2% past that we start to say, okay, this thing's changing personalities and we're going to change our trading strategy and profit off of a different variable. It's trending. But so long as it overshoots it, but stays within this second line that I'm on here, I don't even show the line here because it's below. Let's pull it in there. These second lines, that's what happens, right? Lines of support and resistance are more of, gray areas than they are exact lines.
And you have protective measures in place, even if it does go through that. I mean, that's just the style of your trading.
Absolutely. In fact, can I show one more chart?
Why not?
We've been following this guy for the longest time. This is Zuara Incorporated, right? And people have been selling premium for months now. And then you'll notice that right before the October expiration, Zuara broke out past that second line. And so people are saying, well, what happened? Well, it depends on what part of the trade you were in. If you were in the premium portion of the trade, well, then you got exercised as a massive profit. If you were at the part of the trade where you were getting ready to sell premium and it never reversed, you're even in for more massive profit. And if by any chance you were trying to trade the reverse where you wanted it to go down and instead it's going up, guess what? Your protective call kicked in, you stop loss kicked in, and now you've just got a call that's profiting at Mach 1 speeds. And so you profit that way too. So the scoop is you profit no matter what happens in the situation.
Yeah. And so for anyone watching that's new, that hasn't, because these are somewhat complex strategies, but what's great is you have this free webinar, which I'll go ahead and paste the link into the comments right now. But this free webinar, optioninvesting.org/workshop, where you go into detail behind the logic, behind some of the strategies, and you really set everyone up to begin to understand this. And most new options traders probably need to take some time and to practice. And so that's what Trading Trainer is around for. That's what the mastermind is for. That's what some of the courses in there. So if anyone watching hasn't gone and checked that out, please do. It's wonderful. It should be streaming every couple of hours, every 30 minutes or so.
That's right.
And then what's great about that too is if anybody has questions, you're very good at getting back at them in real time. So
that's right.
Highly suggest everyone go check that out. Let's go ahead and paste that link. Do you have anything else to add to that?
Well, and there's a lot of folks out there who I know consider themselves experienced option traders, but when you delve down deep, the strategies that we're talking about, we talk about 4 of the 27 strategies, are often, when somebody considers themselves experienced, new to them. I've had so many experienced option traders come into our, program and start doing our workshop, start trading with us, having me look over their shoulder. And they're like, I thought I knew it all about options, but I really only knew about, maybe 7 or 8 of the strategies, and the 4 that you're talking about and using. Wow, mind blowing. I've never even thought of trading that way. So, options is a huge encyclopedia of stuff. So even experienced option traders have always come to me and picked up, enough to be mind blowing and life changing.
Yeah. So basically what you're saying is you tailor to the newbies, but you also can teach the old veterans a few things.
That's right.
Because there's just so many different ways to do things.
So long as their mind is open, because sometimes old veterans like me, we're stuck in our ways, but many people can gain at least a little tidbit from me.
Wonderful. Well, I think we're getting close here to the end of the segment. Going into the weekend, going into next week, any wise words?
we started off talking about correlation and how you deal with it, right? If some news headline comes out and all of a sudden the market shoots up and that takes your stock up with it. One of the things I recommend to everybody to do over the weekend and then a little bit in the evening every time when you take a look at what your patterns are doing is take a few minutes before you start taking inventory of what the broad market has done for the day, how it has correlated so that you understand what the tide is doing. So then you can understand what the currents of your particular symbols are doing on top of the tide. But if you don't understand the tide, you'll get confused when you're looking at your symbols as to what's being tied and what's being, the individual nuances of your symbol. Because we trade the individual nuances of our symbol, but you got to know what's pushing it up or pushing it down. I've got a big surfing background, and the scoop is you got to know when the tide's coming in and going out every night before you can surf the individual waves, right?
Yeah, and the only way you become a better surfer is with a legendary surfing instructor, just
That's
as
right.
the only way you become a better options trader is with a legendary options teacher. So, I think that's a great way to head into the weekend. We've got some holiday things coming up over the next 2 months, so there's going to be plenty of opportunities. And we encourage everyone to come join us, ask questions, hit the follow button. We're going to continue to pump these out week after week and try and help everyone become a little bit more educated when it comes to options trading and just investing in general.
Yeah, that's what we do. That's how we do.
All right, guys, we're going to go ahead and wrap it up here. Hope everyone has a wonderful weekend.